A quiet but powerful shift is happening in the world of Shiba Inu, or SHIB. While headlines often focus on price swings and market hype, something deeper is unfolding beneath the surface. The spotlight isn't just on price or market cap this time, but on a remarkable supply milestone: 80 trillion tokens. This number represents the total SHIB held on centralized exchanges, a figure now approaching historic lows, signaling a significant change in the landscape. As tokens steadily leave exchanges for private wallets, it signals a major change in investor behavior. More and more holders are choosing to take direct custody of their assets rather than leaving them on trading platforms. Fewer tokens on exchanges often means holders are thinking long-term, not just chasing quick trades. This shift suggests a growing belief in SHIB's future potential, as investors opt to hold rather than sell. The steady outflow of SHIB from trading platforms shows growing conviction among holders. It's a sign that many are willing to weather short-term volatility for the possibility of greater rewards down the line. This isn't a sudden move, but a trend that's been building for months. Each week, more tokens are withdrawn, and the pace is only accelerated as confidence in the project grows. It's a sign of a maturing market, where participants are taking control of their assets. This move toward self-custody reflects a broader shift in the crypto world, as investors seek greater security and autonomy. The 80 trillion mark is more than a statistic. It's a window into the mindset of the SHIB community. It shows a collective decision to hold, to believe, and to shape the future of the token together. Understanding this shift is key to grasping the bigger picture of the SHIB ecosystem. It's about more than numbers. It's about trust, vision, and the evolution of a digital asset. As we approach this milestone, it's time to explore what it means for the future. Will this trend continue, and how might it impact SHIB's role in the broader crypto market? This is a story about supply, sentiment, and the powerful forces shaping digital assets. The next chapter for Shiba Inu is just beginning, and its outcome will be written by the choices of its community. To understand the 80 trillion figure, let's break down exchange reserves. Think of exchanges as digital vaults holding tokens for traders. The total SHIB in these vaults is the exchange reserve, the liquid supply ready for trading. When traders withdraw tokens to private wallets, reserves drop. When they deposit, reserves rise. Analysts track these flows because they reveal real investor sentiment. Rising reserves can mean more people are ready to sell. Falling reserves suggest holders want to keep their tokens off the market. Moving tokens off exchanges takes effort, signaling long-term intent. SHIB's reserves nearing 80 trillion means less supply is available for immediate trading. This isn't speculation, it's visible on the blockchain. The shift in where tokens are held is at the heart of the supply shock narrative. Imagine walking into a bustling supermarket, the kind you visit every week for your essentials. You see shelves lined with a popular soup, cans stacked high and ready for anyone to grab. When there's plenty of soup available, shoppers can buy as much as they want, and prices remain steady because supply meets demand. But imagine if suddenly, people start buying soup in bulk to store at home, worried it might run out soon. The shelves empty much faster, and the store's visible inventory shrinks, even though the total amount of soup in existence hasn't changed at all. This is exactly what happens in the crypto world when SHIB tokens move from public exchanges to private wallets. Tokens are still out there, but they're no longer easily available for trading. As exchange reserves drop, the supply that's actually available for new buyers to purchase shrinks, making it harder for people to get in at the current price. If demand stays steady, or even increases, this scarcity can create a sense of urgency, sometimes leading to bidding wars and higher prices as people compete for what's left. This is the essence of a supply shock. Less liquid supply on the market, more competition among buyers, and a new dynamic for price movement. Right now, SHIB's exchange shelves are emptying fast as the 80 trillion mark approaches, signaling a major shift in how much is actually up for grabs. The total supply of SHIB remains massive, but the portion that's tradable, the part you can actually buy or sell on exchanges, is shrinking day by day. While this doesn't guarantee a sudden price spike, it definitely changes the supply-demand equation and sets the stage for potential volatility. So every time holders move their tokens to private wallets, they're tightening the market, making each remaining token on the exchange that much more valuable. And that's why fewer tokens on shelves really matters. The move toward 80 trillion SHIB on exchanges is a long-term trend, not a sudden event. This gradual migration has been unfolding over months, reflecting a deeper shift in how holders view their assets. Rather than reacting to daily headlines or short-term volatility, the SHIB community is making deliberate choices about where and how to store their tokens. Exchange reserves once topped 100 trillion, but have steadily declined. Each passing month, the numbers tick lower, signaling a persistent outflow that's hard to ignore. This isn't just a blip, it's a sustained pattern that's reshaping the landscape for SHIB. Since early 2024, more SHIB has left exchanges than entered, week after week. Withdrawals have outpaced deposits, as holders move their tokens into private wallets, seeking greater control and security. This steady outflow is like a staircase down on the charts, each step a sign of growing holder conviction. The pattern is unmistakable, with each drop representing a new wave of investors choosing to hold for the long term. As of March 2026, reserves hover just above 80 trillion, a level not seen in years. This milestone marks a return to figures last witnessed during SHIB's early days, underscoring the magnitude of the shift. This isn't a reaction to short-term price swings, but a sustained shift in strategy. Investors are looking beyond the noise, focusing on the bigger picture and the future potential of SHIB. Holders are choosing self-custody and long-term belief over quick trades. By moving their tokens off exchanges, they're signaling trust in SHIB's future and a desire to be part of its ongoing evolution. Analysts see the 80 trillion threshold as a major psychological and technical level. It's become a focal point for both traders and long-term investors, shaping expectations and strategies alike. Dropping below it would mark a historic low for exchange-held SHIB. Such a move could trigger new narratives in the market and potentially influence price dynamics. More tokens than ever are now in the hands of long-term believers. The community's commitment is stronger than ever, with many seeing this as a defining moment for SHIB's journey. The data paints a clear picture. SHIB's supply landscape is fundamentally changing, and the implications for its future are only just beginning to unfold. To see why this matters, let's look back at 2021. The last time SHIB's exchange reserves were this low, a massive rally followed. In early 2021, most SHIB was held by early adopters, leaving little available for trading. When demand surged, the limited supply triggered a classic supply squeeze. Even moderate buying pressure had a big impact on price. Today, analysts see a similar setup: shrinking supply on exchanges, setting the stage for potential volatility. Of course, history doesn't repeat exactly, and market conditions have changed. But the principle remains: less supply can amplify demand shocks. The 2021 bull run shows how powerful a supply shock can be. Today's shrinking reserves could set the stage for another pivotal moment. Unlike 2021, SHIB now anchors a full ecosystem, including its own Layer 2 blockchain, Shibarium. Shibarium brings real utility, decentralized apps, games, and more, giving SHIB and its sister tokens new purpose. As users interact with Shibarium, more tokens are locked in protocols and staking, further reducing liquid supply. This isn't just about moving tokens to cold storage, it's about using them in a growing decentralized economy. The community and development team have matured, delivering on promises and building confidence. Now, supply reduction is paired with real ecosystem growth. The why behind token movement is more complex long-term holding and active participation. This dual dynamic makes the current supply shift even more significant. As SHIB's exchange reserves near 80 trillion tokens, we're witnessing a defining moment in the crypto landscape. This isn't about price predictions, it's about how supply, demand, and market structure all interact. Less liquid supply means the market is more sensitive to new demand. Any future catalyst, tech breakthroughs, partnerships, or market rallies, could have an outsized impact on prices. The shrinking reserves reflect a community focused on fundamentals and long-term growth. Shibarium's rise gives tokens new utility and purpose, encouraging their move off exchanges for greater security. The 80 trillion mark is a milestone, not a finish line. What happens next depends on how supply and demand play out. For SHIB watchers, this is a critical story to follow as the ecosystem continues to evolve.